Good morning. Bond yields may be up, oil inventories may be soaring, but that hasn't stopped markets responding skywards on the final passing of Biden's COVID relief bill. It's Thursday. This is The Breakdown. As befitting a bill that puts money in the consumer's pockets, the Russell-led index is up yesterday with a 1.84% rise. The Nasdaq once again is hesitant, losing a small fraction of a percent. Part of the support measures is a $14 billion salary package to airline companies, $350 billion to government agencies, and $400 for direct payments through those $1,400 checks, all that accounting for about half of the $1.9 trillion. The rest will be going to public services and small businesses, and a quarter of the grand total to big businesses. Later today, Jumpin' Joe will be revealing the next phase of his relief plans. The U.S. Treasury yesterday produced a $13 billion we have a big problem with the slides today. So let me just get rid of all of those and add the new ones. And now let's change to... No, the U.S. Treasury yesterday produced a $311 billion budget deficit, double January's figure. This is mortgage applications contracted by 3%, and Friday's CPI comes in at 1.3% year on year, a tad lower than expected. Earnings also contracted by 1%, and the long-awaited 10-year bond show a yield increase to 152 from last month's 116. The Canadian dollar is up a fraction after the central bank decided to hold on to current fiscal policies. Still ahead, U.S. jobless claims at 1:30 p.m. GMT, and the 30-year bond alongside short-term 4 and 8 weekers at 6. And now we can shift to Europe, where the FTSE was alone amidst the green yesterday, losing 0.07% on closing. The CAC 40 led others up to the tune of 1.1%, with oil and utility shares countering the losses in mining equities, most of those actually UK-based. European currencies are rising this morning in anticipation of this afternoon's ECB rate decision at 12:75. Overnight, the UK's Surveyors Institute reporting a 52% increase in its price balance index. And yesterday, Make UK published a survey showing that 74% of British businesses are experiencing delays in importing goods from Europe, with more than half facing increased costs, all this mainly on administrative Brexit disruption. Against the yen, we can see a pretty strong trend as the pound bounces off of the moving average, and the overbought RSI seems to have reversed somewhat. Still, the MACD is far from a crossover and seem to have, for at least for now, a bull in the chart. Except in Australia and New Zealand, Asian benchmarks were up this morning, mostly in the 2% region, except the Nikkei, which lagged behind with a 0.5% increase. Producer inflation in Japan disappointed overnight with a 0.4% month-on-month increase, leaving the yearly figure still in contraction. Oil reacted with a $1.50 yesterday dip after the EIA confirmed the API's news with its own 13.8 million barrel rise in crude stocks. The commodity then regained that and more to come up by nearly 0.5% for the day. Bitcoin is back on the upswing as more and more investment firms slide into the mire, and gold seems to be on a rebound. Prices now for the third day up in a row. As we can see, that's a strong trend in front of us, decent volumes to maintain it, and an overbought RSI still rising. We have an engulfing bull up top, perhaps a retracement on the way, but still a pretty healthy rise. GameStop is back in the news as its shares jumped 38% in yesterday's session thanks to subreddit fans. The stock exchange immediately halted trading as volatility went through the roof, and after hitting its million user mark, Disney Plus has now scored another major coup. It's landed a 7-year contract to stream national hockey games through its ESPN and ABC platforms. That leaves me wondering if the violence will be as controlled as that on The Simpsons and Muppet shows, now also owned by the mouse. We still have some earnings coming in this morning. Adidas showing a 5% year-on-year decline in revenues. And Oracle reported a 3% increase to about $10 billion for the last quarter. Well, the week is nearly done. Not as bad as we expected, not as good as we could have hoped for. We'll be back Friday to kiss it goodbye. The week, I mean.